afternoon and welcome back to this Money Control's live stream. You're watching Closing Bell with me, Lovisha Darad. And the markets have been up and running for the third straight day now. Positive start for this week and of course for the month as well. On the index levels, if you look at Sensex is up about 500 points. Nifty has also reclaimed that 25,000 level and is well above that 2550 mark as well. So experts had pointed out earlier that Nifty's close above 25,000 is crucial for the up move. Now we'll understand, with the experts what next level that we need to watch out for as well. But yes, today's power lifter, that has been your financial pack. Given the healthy loan growth that the banks have reported so far for the September ended quarter, brokerages have overall been quite impressed by the performance, and that's why you could see Bank Nifty doing well for the most part of the day as well. Right now, it is up for the fifth consecutive session, that is led by HDFC Bank and Kotak Mahindra Bank as well. Not just bank, but also IT stocks for a change that has been well behaved, up for the third straight session, and tech stocks have been doing well. TCS up ahead of the Q2 results, which is due later this week itself. Street hasn't been expecting much from the IT companies, but commentary is something where the eyes are set on from the management itself. Now, coming out to what stood out today in terms of individual performance on the Nifty, that is your hospital stocks. That did well after the government revised rates for 2,000 medical procedures, which is effective to October 13. Brokerages have also been quite impressed and expect that the new rates will improve EBITDA and cash flows for the hospital. And that's why you can see Max Health, which is doing well, 6% uptick for the counter, followed by Apollo Hospitals also with about 3% gains. Other than that, like I was talking about the financial stocks, Shriram Finance also doing well, 4% gains coming in for there as well. Axis Bank also doing well with about 3% gains, and TCS ahead of its Q2 results with about 3% gains. On the other hand, if you look at the flip side, Tata Steel with about 2% loss. Of course, majority of the metal counters are seeing profit booking after the large run-up that we saw in the last week itself. Adani Ports also with seeing a cut of about 1%. Power Grid, NTPC and SBI Life Insurance, some of the other losers on the Nifty 50. But yes, to understand how you should position yourself in a market like this, just 30 minutes before we get to the close, let me introduce you, and without much further ado, let's get in our first technical expert of the show. Joining me is Prashant Sawant, founder of Catalyst Wealth. Prashant, good afternoon. Nifty is now reclaimed at 25,000 levels. What is the next level that we need to watch out for?
Very good afternoon and good afternoon to all the viewers. So I think if you look at Nifty, the pullback has been really strong, and I think we are now comfortably trading. We can say we are still half an hour to go, but we can say we are almost about to close comfortably about a 20 moving average. So which happens to be a major level from a technical perspective. The next resistance, according to me, happens to be in the zone of 25,180, 25,200, which is around 100 points from the current level. If we happen to close above that, then we can comfortably expect the pullback to move to around 25,300, 350 levels as well. My suggestion would be a common mistake which everyone does is as soon as there is a pullback, we start talking about a new high. I think we should talk about level to level major resistances and ensure that for every trade, every position we enter, we have to take care of the risk to reward. That's the way the market can reward us. And in case the market doesn't work the way we are expecting, we are already protected by our stop losses.
All right. Prashant, also for the Bank Nifty index, fifth straight day session continuing for the financial stocks. What are the next levels that we can watch out from there itself?
So I think we can expect a rally to levels around 56,400, 56,500. There is a range breakout if we see, and the major banks are participating. Although the leader from the sector, which is HDFC, has not performed well. But I think if we look at Kotak, SBI, and Axis, they have definitely helped Bank Nifty for the last 3 to 4 sessions, and we are trading above the crucial level of 56,000. So I think we can comfortably move to levels around 56,400, 56,500, and from there we can decide the next course of action.
Okay. Prashant, what about the IT stocks? We're seeing some bit of a reversal after the deep correction majority of the tech counters have seen. Is this just meant to be temporary ahead of the Q2 results that the street is keenly watching out for?
So I think if you look at the entire pack, one stock which definitely looks good from a risk reward perspective is Infosys. The reason being that it was always consolidating in a bracket, in a zone, and it did not make new lows. And from that zone, the buying has come. So I think I would definitely, if I have to select one, In the front runners, it would be Infosys, currently quoting around 1475 in spot. I think one can comfortably keep stop losses around 1450, 1455 zone and look out for the pullback to continue around 1520, 1525 odd levels.
Okay, all right, 1525 odd levels. Let's also talk about metal stocks because they've seen some profit booking in today's trading session. 5 days of gains that has been snapped out in today's trading session. But yes, Prashant, anything that you're liking from the metal counters?
So I think if you look at the entire trajectory or the sectoral rotation of the market for the past month, month and a half, metals were definitely leading the entire move. And when the market was sluggish, I think now there's a bit of profit booking, which is normal, expected. But in this pack, if we currently look at stocks like Tata Steel, I think one can definitely invest here, keeping stop losses around 165 odd levels. And we can look out for levels around 178, 182 odd.
Okay, all right. Let's also talk about some stocks in focus. We'll first touch base for the two private lenders, HDFC Bank and Kotak Mahindra Bank. Good pre-quarterly September update where we saw good credit and deposit growth. Brokerages have remained quite enthusiastic on both the counters and they've seen decent traction today. Prashant, what are the levels that you would point out and how should investors approach them?
So I think if you look at Kotak Bank historically, a major resistance and a key level has been 2200, which happens to be around couple of percent from the current level. I think the ideal strategy would be to trail with the current day low, which for now is around 2100, 2110, and look out for levels around 2200. If we get a close and a breakout above 2200, then I think the stock can show more strength. But currently in the entire banking pack, I think Kotak Bank is the leader, and along with Axis Bank, it definitely is a good momentum pick.
Okay, okay, all right. These are the two counters that we need to talk about. What about IndusInd Bank? Because that also came out with its, Q2 business update. The stock has not been seeing a good reaction also on the back of that. We are 1% down at this point of time. And if you look at the past 1 month charts also, there's no, any reversal on the counter as well. Do you expect the underperformance to continue?
So I think if you look at the sector, ideally the approach has to be look at the sector. The sector is strong. So we should pick out the stocks which are doing well, which are showing breakouts, like we spoke about Axis, SBI, Kotak. At the same time, if you look at IndusInd, it has been going in a series of lower bottoms and lower tops. So my suggestion would be to avoid it at the current levels and invest more in the stronger ones.
Okay, all right. Let's also talk about Fortis Health because that stock surged up to 6% in today's trading session after IHH Healthcare Berhad received approval from the SEBI to proceed with its open offer for Fortis Healthcare to increase its stake in the hospital chain by another 26%. The stock is doing well, 7% gains coming in for the counter. And so far this year, the stock has been on a structural uptrend, 20%, 26% gains. What would you expect next to be, Prashant? Because the stock has now crossed 1,000 mark.
So I think over here the stock is a little stretched and I would not chase it. My suggestion would be those who are holding longs can trail comfortably around 1025, 1030 odd levels and wait for the stock to cool down to get a fresh entry.
Okay, all right. Let's also talk about Bank of Maharashtra because that also reported some good numbers from the Q2 updates. The lender did see a 12% increase in its total deposits and advances also saw a growth of about 17% on a year-on-year basis. That led to credit to deposit ratio expansion to about 82% from 78% in the previous year. The stock has been facing a 52-week high resistance levels. 57 is where it has been trading at. Prashant, can it reclaim those levels? 59 rupees, that is where the stock's 52-week high lies.
Oh, definitely. I was just about to say that the stock is at a major resistance around 59.60. So I would not suggest buying fresh because it happens to be hardly 2-3 points from here. But my recommendation would be those who are holding longs can trail around 54, 54 and a half and continue to hold the position. If we get a breakout above 60 and a close, then I think we can definitely look out momentum taking the stocks to levels around 65, 68 odd.
Okay, all right. 65 to 68 odd could be the next resistance levels for Bank of Maharashtra. Let's also take about another losing stock in today's trading market. That is your Avenue Supermarts. It did not react well to its Q2 business update. While we did see a double-digit revenue growth for the September ended quarter and the fact that the company added 8 new stores during the quarter, but brokerages have remained quite disappointed with the pre-quarterly update. We did see Goldman Sachs giving out a sell call on the counter, cutting the target price, saying that the pace of the store addition was quite slow and revenue figure has been quite sluggish given that the company saw a low base in the last quarter. What would you expect the next levels to be, Prashant? How should investors trade this from a short to medium term perspective?
So if we look at this stock, the 200-day moving average is placed
Hmm.
somewhere around 4,250, 4,240 odd levels. I think the stock may definitely test those levels. If we get a meaningful bounce back from there, then we can definitely think about buying the stock from a positional perspective. For now, my view would be if anyone is holding the position, your stop losses have to be below the 200-day moving average, which is say around 4,225, 4,210 odd levels.
Okay, all right. Those are the levels that we need to watch out for. Let's take another stock in focus. That is your Jubilant Food. The company did report a 19% increase in its consolidated revenue in its Q2 business update, and like-for-like growth that came in at about 9.1% in the quarter under review, while Domino's Turkey like-for-like growth was at about 5.6%. But the stock has not been reacting well despite its Q2 business update. And it has, from September highs, also the stock has been on a sliding trajectory. How would you view this performance, and do you expect this underperformance to extend going ahead?
So I think the stock is having a weak structure, and any pullback to the 20-day moving average is being sold. Even today, if you see the high is almost resisting the 20-day moving average. My suggestion would be to avoid longs at this level. The right level for the stock would be a close above 640, 642 levels. Then we can say that conviction is back in the stock. We are back in the zone, and we can look out for buying with stop losses around 630, 625 odd. Till we don't close above that 640 level, I think I would avoid the stock.
Okay, would avoid this stock for the counter. Let's take another stock in focus. That is your Poonawalla FinCorp, because that stock surged to new highs on the back of its good business update. We did see that the OM has risen by over 50% on a Y-on-Y basis, and sequentially also it has been up by about 15%. The stock has now mounted to that 500 rupee mark. What can we expect, Prashant? 600 soon for the counter?
So if we look at the price action today, from the highs made around 570, 575 odd, the stock has seen some strong selling, and we are settling around 530, 525 odd zones. I think it is a little stretched, so I would not enter midway. My recommendation would be to trail the existing positions with stop losses around 515, 510. For any fresh entry, I would look out for the same zones around 520, 515 odd levels.
Okay, all right. That's the view coming in for Poonawalla FinCorp. Let's also discuss about hospital stocks in general, because you can see Max Hospital, Apollo Hospital seeing good traction on the back of the government's new revision of the rates, which will be effective from October 13th onwards itself. But yes, good buying interest coming in from there itself. Prashant, how would you expect investors to play all of these companies, and anything that you're liking from the space?
So I think one stock which definitely stands out today is Max Health, and it is capturing the 200-day moving average again after a strong series of selling. I think I would definitely preempt here and build a position. Currently quoting around 1140 odd. My stop losses would be around 1120, and I would look out for targets around 1180, 1185.
Okay, 1180, 1185. Let's also talk about Nykaa, because that stock has been doing quite well. 6.5% gains coming in there for on the back of its healthy second quarter update, where we did see that the company has that the stock has also risen to its highest level since September 8 this year as well. If you look at the consolidated gross merchandise value growth, GMV growth, that is expected to be close to about 30%, up from mid 20s% in the recent quarters. That's what the company has been saying. And the renewed momentum in the fashion vertical is to be driven by the by the fashion and the beauty vertical itself. The stock has been doing quite well. But yes, from a near-term perspective, how would you expect investors to trade this counter?
So I think this happens to be a clear volume back breakout. I think we can definitely make a fresh position here as well. Keep stop losses around 245 spot closing basis. I think if the breakout gets a follow through, we can comfortably expect levels around 275, 280 levels.
Okay, all right. 275 levels can be expected for Nykaa. Let's also take in Delivery, another new age company that has been gaining good traction in today's market. The stock has already climbed about 5% in two sessions following its September month business update as well. The company did say that it has delivered about 17.5 million packages within 24 hours, given the onset of the Navratri and, of course, the festive season. And the stock has been doing quite well, 5.5% gains coming in there for the counter as well. And from a year-to-date perspective also, delivery has been showing a structural uptrend. But yes, from a near-term perspective, how would you expect investors to play this counter, and what are the next levels that we need to track?
So one thing that stands out here is the rising volume with the rising price, which means the price move is backed by strong hands. So one can definitely enter, and we are currently quoting around 462. Keep stop losses around 450, 452 levels, and we can expect the swing highs around 490 as a target.
Okay, all right. Let's also talk about one particular stock in focus, given the financial stocks have been gaining quite the momentum. We'll talk about Bajaj Finance. How does this NBFC stock look like on the charts? Because past 1 month, the stock has been doing quite well. Today, the stock has seen decent traction, nearly 2% gains coming in for the counter. How would you expect the next levels to be?
So we have the highs made today are major resistance to the stock, and I would not enter near a resistance. My suggestion would be to hold the existing longs with stop losses around 995 odd levels and wait for a close above 1025 to enter fresh. For now, just trail the existing longs.
Okay, all right. Let's take another stock in focus. That is your Atlanta, because that stock has zoomed about 73% in the past 3 days. It's a micro cap stock, and of course, we did see a good corporate update that came in for the counter as well. Given that the company has entered into an agreement with Ircon International to undertake the construction of Bandara Gadchiroli Access Control Expressway in Maharashtra as well. The stock has been seeing good traction, 20% upper circuit. That's where it has been. But yes, any takes on the counter for you,
Uh,
Prashant?
I would avoid it purely from a risk reward perspective because I don't have a clear stop loss or a clear target. So only those who are holding can trail it. Stop losses around 60 odd levels, which is a day low. But I would avoid any fresh entry in the stock at the current level.
Okay, all right. Let's take another stock in focus here. That is your Tata Steel, one of the top Nifty losers for today's trading session. 2% cut coming in for the counter as well. But yes, metal stocks have been gaining quite the momentum. Today we are seeing some bit of a profit booking. But on the levels perspective and from a charts perspective, how do you view this counter?
So for Tata Steel, as we spoke right at the beginning, I think 170, 174 happens to be a resistance, but we can still preempt and look out for stop losses around 165 odd spot closing basis and expect targets around 180, 182 odd.
Okay, 180 to 182 odds for Tata Steel. But yes, Prashant, the broad end of the markets, that has been seeing quite a bit of a resilience. If you look at the small cap index, it's up about for the fourth consecutive session. Mid caps also for the third straight session. How would you see this resilience, and can we expect some good gains to be built on for the upcoming sessions? How do they look like?
Yeah, for sure. I think as we spoke about Nifty right at the beginning, I think the major index Nifty, Sensex, both they are showing a strong pullback, and I think Bank Nifty has outperformed as compared to all the other indices. So we can expect the pullback to continue. As I said, the next level for Nifty happens to be around 25,100 odd. If you look at mid cap, even there we see a strong pullback, and we can expect currently we are almost around 12,950, 12,940 odd levels. We can expect the pullback to continue up to around 13,100, 13,150 levels.
Okay, that is the view coming in for the broader end of the market. Some bit of a resilience, and of course, good gains could be expected from the broader end of the markets in the upcoming sessions as well. Let's also talk about one stock in focus, that is your Premier Explosives, because that stock has seen a good momentum today. It has hit a fresh 52-week high as well, up about 10%. After sources told CNBC TV 18 that the Defense Ministry has opened the missile and ammunition production in the private sector, and that is why you can see a good momentum on the counter that is coming in as well. If you look at from the YTD perspective, the stock has seen good momentum, and of course from August lows, the stock has seen about 50% uptick. But yes, going ahead, how would you see the charts? Good momentum? Is it a good sign in the upcoming days also?
I think yes, definitely. If you look at the volumes today, they are surely popping out of the chart. So I think I would preempt here, although we see some selling on the higher levels, but we can comfortably place the stop losses around 620, 625 levels. And if the breakout sustains, we can expect minimum 700 on the counter.
Minimum 700 on the counter could be expected for Premier Explosives. Let's take another counter in focus, that is your KEC International. The stock is marginally higher in today's trading session, even after it has bagged or secured an order from its arm, EPC arm of the RPG group, that has announced and secured a new orders which is worth about 1100 crore rupees across its key business verticals. The stock is marginally higher, but if you look at from YTD perspective, the stock has barely underperformed. Right now, it has been consolidating around those levels of 800 to 850 odd levels as well. What would we expect with the will the underperformance continue, Prashant? How would you see this on the charts?
So I see some initial levels of base formation here, and purely with that view and managing the risk, I think we can keep stop losses around 845 spot closing basis, and look out for targets around 880, 885 out, which happens to be a 1:2 risk to reward, which is a fairly good risk reward ratio to enter. So purely from that perspective, if anyone wants to plan a trade, you can keep stop losses at 845.
Okay, all right. Let's talk about another stock in focus, that is your Aditya Birla Lifestyle Brands, because that gained about 11% on in today's trading session after we did see a block deal on the counter. 5% of its equity got changed in the block deal window. Of course, the buyers and sellers are not as certain, but we did see some reports which indicated that Flipkart was set to divest up to 6% of the stake in the company via this block deal itself, and the transaction was expected to raise about 935 crore rupees and was being termed as a clean out trade as well. Today you can see the stock has been doing well. Right now the stock is seeing a gain of about 7% itself. But yes, from a charts perspective, anything on the counter, Prashant?
Yeah, definitely. I think the move today has been strongly backed by volumes, and we can keep stop losses around 135, 138 odd levels, and look out for a move to approximately 160, 162 levels as a target.
Okay, all right. 160 levels coming out for Aditya Birla Lifestyle. Then let's take another stock in focus. That is your Angel One, 2.5% uptick coming in for the counter. We did see a good business update also coming in for the September ended quarter, where the company's client base has risen by about 1.5% on a month-on-month basis for the month of August, and on a year-on-year basis, the metric has risen by about 24%. The gross client acquisition has, however, remained flat. However, the number of orders placed, that has increased by about 16% for the month of September in comparison to August itself. However, the year-on-year growth has been quite negative for the counter itself. But yes, Angel One, how does the counter look like on the charts, Prashant? Because if you look at from a 1 month perspective, the stock has been on a sliding trend.
So I think, yeah, as you said, it's been on a sliding trend from the past, almost you can say start of June or mid of June, and it has been in a series of lower tops and low bottoms. Even now, it's a pullback to the 20 moving average after a long time. I would not preempt. I would like to respect the trend and avoid it till the stock does not close above 2300, which is hardly 1.5% from the current level. But if it closes about 2300, it can give me a certain level of conviction. For now, it would be an avoid.
Okay, all right. Avoid for the counter. Let's talk about Kalyan Jewelers also, because that company came out with its Q2 business update, where we did see that the company has reported about 30% of revenue growth in the second quarter, and the same store sales growth at about 16%. The stock has not been reacting well, and from the past 3 months also, the stock has been quite an underperformer. What would you expect the next to be, Prashant, for Kalyan Jewelers?
If I look at the current pattern, for me, it would be an avoid. The reason is that previously, if you look at this pattern, around 500 levels happened to be a very good support. That support was broken, and it's a first pullback to that level. In very basic technical terms, if a support is broken and the price is pulled back to that level, there is a resistance, and we can see that in today's price action as well. So, because of that reason, I would totally avoid it unless and until it does not close above 500, 510 levels. It stays out of the buy bucket for me.
Okay, buy bucket for you now. We can just see the closing rates for the Nifty on your screen. 25.68, that is where we have closed at right now. And you can see nearly a percent uptick coming in for the counter, 180 points upsurge for the Nifty 50. Sensex is also closed with about 580 points gain, nearly a percent gains coming in for the counter as well. So all in all, we have settled out in the positive territory, and it is the third consecutive set of gains for the benchmark indices as well. All in all, it was a positive start to the week, and of course, given the historical trend for the month of October, that the seasonality has always indicated that we have given out positive returns, it definitely comes as a big plus. Coming to the Bank Nifty Index, that has been the major power lifter for today's markets. Nearly a percent gains coming in for the counter. And of course, if you look at the broader end of the markets, both of them have been quite resilient also. But yes, like I was talking about the Bank Nifty Index, let me once again go back to you, Prashant. You did mention that Kotak Mahindra Bank looks like an outlier from a private bank's perspective, and of course, very strong in the technical charts perspective. But what about the other lenders? If you look at Axis Bank for that matter, Bank of Baroda also came out with its Q2 business update. How would you see all of these counters?
So I think Axis Bank, definitely we spoke about this, and I see a bullish approach on it. If you look at Bank of Baroda, I think the stock needs to cool down a bit, because if you see the highs made today, approximately around 270, 272 odd levels, there was a strong selling, and we have closed at day low around 265. From I would say for the current longs, the stop loss has to be around 260, 258 levels, and if you break those levels, I would exit for once and wait for the stock to cool down around 250, 245 levels, looking out for a fresh buy. So yes, the pattern is strong. We can look for buying on dips, but at current levels, just wait.
Okay, all right. Just wait for the counter. But yes, if you look at majority of the top gainers on the Nifty 50 has been the hospital stocks. One of the top, given the revision in rates that we have seen for the government scheme, that is why you can see all of these hospital stocks doing well on the back of that. You can see your Max Hospital, definitely one of the top Nifty gainers for today. Then you can see Apollo Hospitals also doing well. Shriram Finance, Axis Bank, some of the other gainers on the Nifty 50. And of course, on the losing end, we can see Tata Steel, Power Grid and Titan, some of the other losers on the Nifty 50. But yes, from a sectoral perspective, it was the banks and IT stocks that helped Nifty cap any particular downside, and that's what actually did the heavy lifting for the markets today itself. On the other hand, the broader end of the markets, like we were talking about earlier, they also remain quite resilient. And realty stocks, however, they continue to remain sideways for the time being. On the other hand, if you look at FMCG and pharma index, both of them are seeing a decline of about 0.5% itself. On the other hand, if you look at the metal stocks, continue to see profit booking of about 1% itself. But yes, Prashant, well, let me once again go back to you. Nifty Realty Index, quite a sideways momentum given the RBI's policy and, of course, stimulus measures that has been announced. No major reaction coming in from there. How do you see the charts then?
So I think if we look out for stocks like DLF, I have been tracking it since the morning, and you don't see any conviction, as you rightly said. So I would wait. If we talk about DLF specifically, I think I want to close above 750 levels for the conviction to build in, wherein we can deploy some longs on the counter. For now, the entire index would be an avoid, and any stock, DLF, Oberoi, Godrej, I think for now it would be on the radar, wait and watch, but not the right levels to enter.
Okay, all right. Not the right levels to enter. Let's talk about another stock in focus. That is your KIOSCL. The stock has hit a new high. We did see some heavy volumes that came in for the counter. In the past 3 days also, the stock has surged about by 47% itself. But yes, from a technical chart perspective, how would you see this particular counter going ahead, Prashant?
So it's a strong breakout. The volumes are extremely high. In fact, if you see the volumes for the past entire month have been high. So the strong hands are definitely driving the move, but it is a bit stretched. I would not catch it midway. I would wait for the stock to cool down to levels around 600, 610 odd, and I can look out for an entry. It is a strong buy on dips, but I think for at the current levels, I would just wait for a dip.
Okay, all right. For current, you'll wait for the dip. Let's also talk about another stock in focus. That is your Bandhan Bank, since we've been majority talking about banks itself. We'll talk about Bandhan Bank also because it came out with its September quarter update, where the loan book and where the loans have risen by about 7.2% on a year-on-year perspective. Total deposits have also risen by about 11% on a Y-on-Y basis and 2% on a Q-on-Q basis. But yes, Bandhan Bank, today the stock did not do well. 0.4% decline coming in there, Prashant. What would you expect the next levels to be?
So I think if I were to select, Bandhan Bank doesn't show me the conviction. The reason being 168, 170, 172. These are major hurdles, and I think on every 2 points there is a resistance. But if you were to look at AU Bank, here I see a lot of conviction in terms of the price backed by volumes. We close around 764, 765. I think one can keep stop losses at 750 and look out for levels around 790, 795 on the counter.
Okay, all right. Let's also talk about IDBI Bank as well because they also came out with its Q2 business card. where we have seen that their total business has seen a gain of about 12% on a Y-on-Y perspective. And if you look at the total deposits, that grew about 9% on a Y-on-Y basis. And the bank's CASA deposits have seen a growth of about 4% from a year-on-year perspective. The stock has done well, but closed flat in the green. IDBI Bank, anything that you are watching out for the counter in the next trading session, of course, Prashant?
So one good thing on the counter is that 20 moving average is sloping upwards and we have closed about it, but above it, but I don't see any conviction till we don't cross levels of 95. So for me, it would be an avoid. The only those who are holding longs can trail with stop losses around 89, 88 odd levels and continue to hold the position, but I would not deploy fresh longs at the current level.
Okay, all right. Not a fresh long at the current levels for IDBI Bank. All right, let's take some small finance banks also into focus because they also came out with its September quarter and pre-quarterly update figures. We'll talk about first about AU Small Finance Bank because that particular counter did well in today's trading session. 2% gains coming in for the counter itself, where we did see that the total deposits rose to about 1.3 lakh crore. And if you look at the gross advances, that rose about by 22% from a Y-on-Y perspective. And total deposits also saw a good, healthy surge with about 21% on a year-on-year perspective. However, CASA ratio, that has contracted from about 32.4% of last year to about 29.4% to this particular quarter. But from a YTD perspective, the stock has done quite well, 34% gains coming in for the counter. But yes, Prashant, coming back to you, how does the stock look like on the charts? The past few recent days, the stock has been consolidating between that 650 to 700 band.
So I just gave a buy on this counter when we discussed about Bandhan. I recommended AU Bank because the breakout is clear, the volume is there on the counter. So I think, as I said, we can keep stop losses around 750 levels. Look out for levels around 790, 795 as the targets on this. A strong move today, and I think the move may continue for the next few days, wherein we can see the price approaching our targets.
Okay, all right. Since you mentioned AU Small Finance Bank that you've been quite bullish on, let's also take in more of your picks. Anything else that you're liking in this market? We have the Q2 earnings which will pick pace, but we also have the festive season on the horizon. What are you finding interesting in this market?
So I think I was going to talk about SBI, but we almost discussed the sector. I see a lot of conviction in this and the entire PSU banking sector. So if I want to talk about SBI specifically, I think we can keep stop losses at 860, 862 levels, and we can look out for targets around 890, 895. I think there is a lot of strength. There is price acceptance because we have been hovering around this zone for quite some time, around 8 to 10, 15 days. So I think we are ready for the next up move, and that's why I'm looking out for longs in SBI.
Okay, all right. SBI, one of your top portfolio picks also. But yes, with that, we have to let you go, Prashant. Thank you so much for your time and connecting with us.
Thank you.
All right. So far, the week has been quite positive, given that we have we do have the Q2 earnings results, which will be on the annual from Thursday onwards itself. TCS will be reporting its Q2 results. Of course, largely the management commentary will be something that everyone will be setting their eyes on. Given that the IT sector has been under a slew of tariff jitters and of course the H1B news, but whether or not that overhang still prevails is something that we'll be understanding from the management itself, and of course how their deal wins and discretionary spends have been panning out for. But yes, definitely today the banking and the financial stocks, they have been one of the top performers, and that is what has led Nifty to the third straight winning streak as well. But yes, historically October has been favoring the bulls because Nifty has closed 7 out of 10 times higher in the month of October itself. This has been despite FIS turning 60% bearish in all of those instances. Despite that, the October month has been quite resilient, given that the festive season has been quite favorable for the bulls itself. But yes, now to understand how your portfolio should look like for the long term and making sense of this current market scenario, joining me is Nirav Karkera, Head of Research at Fisdom Research. We'll understand from him more on how we should position ourselves. Nirav, good afternoon. We're seeing 7 IPOs rush this week. How do you see the sentiment to play out? Because it's a positive start to this week and it's a positive start to this month also.
So, Lavisha, like you rightly said, positive is the best word to describe it. In fact, the slew of IPOs come after a rather long dry spell. In fact, for the longest time over the past couple of years, many of these IPOs were already in talks, but most of them were being put on hold till the dynamics turned more favorable. So, this is a very good sign that the market health and overall dynamics are much more conducive for more primary market offerings. In fact, there is good reason to believe that this is just the start of another very long round of the IPOs hitting the bourses really soon. In fact, the expectation is although it is starting just now, it should run well through the end of next FI as well.
That's right. But do you think this mega 10,000 crore IPO curse that the markets have been seeing, otherwise, can this break by Tata Capital or LG Electronics India? Because in the past, we've seen Swiggy and HDB Financial, they've been, have been done in the good listings in the secondary market. How would you see it this time around?
So this time around, it would be slightly tepid. Of course, the market has the appetite. Liquidity is pretty healthy as we speak, but it's not going to be easy with IPOs of this size hitting the bourses around this time. We do not expect as much of a listing pop of a significant quantum or a very near term gain coming through in a rush. However, this could set the foundation and a very strong foundation for slow and gradual uptake in the prices going forward. If the business and the financials continue to deliver upon what most investors are expecting, the IPO and the IPO, even though it may seem like it has listed at a very lukewarm note, it could be in fact a very strong foundation for the next leg of rally once the next set of quarterly results start coming in.
Okay, okay. But Nirav, FIs, they've been net sellers for the third straight month. And so far in October also, there hasn't been a positive sign like I was talking about earlier. And our external affairs minister has also been saying that US and India are yet to reach a common ground in terms of their trade agreement. Do you believe there wouldn't be a change in stance in sometime soon also until the tariff issue has been completely solved out?
So the exodus of FIIs is not as much linked to the entire tariff limbo that India-US is facing, right? There are a variety of reasons why that's happening. Among various others, there are a few structural reasons. So not all FIIs are typically shorting India, right? The idea is not to not go long on India. They need to rebalance and recalibrate portfolios. So it's any a large part of the exodus from India also is coming by way of rebalancing emerging market exposures, wherein India is a significant weight. So that is one key reason. Another reason could be a flight to safety in general, wherein there is a risk of emanating in the global landscape, and wherein there is a risk of against equities and emerging market equities, wherein the risk premium is no longer being seen as worthy of the risk that is being undertaken. So it's not necessarily an exit from India. In fact, if you look at it, and because we started the conversation on the subject of IPOs, it would be a fun exercise to simply look at the anchor books, and you would realize that FIs are not really exiting India. They're just finding much more nuanced routes to enter India. The anchor books are full of FIIs, and the participation is pretty robust even there. So, most FII exodus that we are seeing is a part of the rebalancing, and of course, the risk of environment. There is a very small part, relatively small, versus what we are thinking of right now as we speak. That is basically on the account of valuation or any sort of negative outlook on India. So there is no pessimism on the growth narrative as yet.
Okay, okay. There's no pessimism on the growth narrative. But Nirav, we have seen that the money has been flowing towards China and Taiwan, given their big global AI theme as well. So would you say that this is something that is also keeping them on the sidelines?
So clearly, China and Taiwan are key markets to offer entry into the entire AI value chain, right? So if there is one big mega trend across the globe, that has to be the AI. And apart from playing the big tech in the US, where valuations have surged like crazy, the very next logical step is to move further deeper into the value chain and start playing into suppliers of AI. So most such companies are, and especially those engaging in manufacturing, are available in the listed universe in China and the Taiwanese markets. So there is a clear interest for that. We believe that going forward, the interest will continue to rise. In fact, very recently, China went through quite a slump and a broad-based slump, which cleared quite some froth of the valuations. So some of these companies that were attractive from a growth standpoint also started looking attractive from a valuation perspective. So these few things have come together, and these are the stars that are aligning for Chinese and Taiwanese companies, but they're very selectively into pockets. It's not a broad-based buying happening across these countries and dices.
Okay, okay. Nirav, let's now shift focus to some good business updates that came in from the financial space. HDFC Bank, Kotak Mahindra Bank, they did see some good loan growth in their pre-quarterly update. We had some margin concerns in the previous quarters, and now that the credit offtake is back, and along with this RBI stimulus measures, how do you expect the margin picture to pan out for the upcoming quarters for the majority of the banking heavyweights?
So, of course, the central bank stimulus is a very, very important lever in terms of aiding the margins. But what's more important is that the banks have been facing quite a difficult period when credit offtake had quite literally plateaued. And at the same time, it was difficult to gain access to low cost deposits with dwindling CASA growth. I feel a couple of these vectors have now started showing signs of turning around. Like you rightly said, credit offtake has started, and it has only started. It is not really, it is not really taken off in full steam as yet. The better days are ahead of us in terms of credit offtake. But one thing that we're clearly seeing is that the CASA balances have showed up, which gives the lenders a lot of confidence in their ability to access low cost deposits. In fact, a couple of marquee announcements, like the ones made in the previous MPC meet, including the one wherein banks are now allowed to fund large-scale M&A. At the same time, the provisioning requirements being eased out acts as key levers which will support the banking ecosystem going forward as well. And all of these support are not just going to be top line accretive, but also margin accretive as operating efficiency continues to improve at the bank level, especially talking about selective NBFCs and private banks.
Okay, okay. What about the small finance banks? Because we did see some good updates coming in from Equitas as well, and we also saw from EU Small Finance Bank. They also gave out some good business update for the September ended quarter. How would you juxtapose all of these compared to the other private lenders?
So small, so the geographies and the target cohorts in which these small finance segments particularly operate in is seeing a revival in demand for loans and advances. So we believe that this is a secular trend that is on the rise. It should sustain at least through a few quarters going ahead.
Okay, all right. Let's also talk about consumption as a theme because it's a large basket. Nirav, where do you think the focus should be for investors? Because we've seen a good amount of rally in autos, but what about the other pockets? Where do you see this?
So within the consumption pack, we would like to specifically focus on discretionary consumption. Of course, autos is one, but we believe that the valuations for consumer staples is has pretty much priced in most recovery in that one can anticipate on account of the revival in rural demand as well as the GST kicker that came in. But consumer discretionary is some place where there are selective opportunities to participate in the growth. There are several opportunities that will also stem from a revival in the urban led demand, which was pretty lackluster for a very long time now. So consumer discretionary within the consumption pack is something that we would look at much closely.
Okay, consumer discretionary pockets. Okay, all right. Let's also talk about hospital stocks because we did see a lot of hospital stocks gaining traction today on the back of the government's revision of rates for over 2,000 medical procedures. How would you fundamentally view all of these counters, your Fortis, Apollo, Max Healthcare, given that they've got good revenue exposure under the scheme that the government has approved?
So, most of these hospitals were anyway undergoing a structural growth story. In fact, the outlook on the entire healthcare industry is positive. Having said that, and the revisions that are made to the CGHS scheme is expected to have a multifold effect. In fact, a cascading effect across the entire ecosystem. One, of course, there are many hospitals that are participating and that stand to benefit from the revised rates that are expected to be higher in the higher by at least 15 to 25 odd percent on an average. But the in between lines are also accretive to hospitals undertaking private capex and expansionary plans. So the fine print also talks about how the rates are going to be much more superior for super specialty hospitals having over 200 plus beds, right? So with already having these many participants having access to the CGSHS benefits, one can expect the space to further expand with more hospitals taking on private capex and expanding their suite of services. At the same time, tier 2, tier 3, although the CGHS revisions are going to be much lower than the tier 1 requirements, it's still going to be much higher than the current base levels. So, a further expansion of many such hospital groups into tier 2, tier 3 cities is expected to be top line as well as earnings accretive for most such large groups of hospitals who have the ability and the wherewithal to expand into tier 2, tier 3 cities as well. And plus, the ability to take on cashless claims only just increases their ability to serve a larger segment of customers and patients, which will be in the medium to longer term revenue accretive.
Hmm. Okay, all right. Could be reflection in the upcoming quarters as well that we need to watch out for. But yes, speaking of the earnings, we have the IT results this week, Nirav. What are the factors would you be watching out for, and how would you suggest investors to approach the space, given that they've seen a slew of global news action, and of course the valuations, however, have remained quite comfortable levels?
So typically, the season tends to be a strong season. However, there's very limited reason to believe that IT companies will surprise on the upside. If nothing, the revenue growth expected is slightly tepid as we speak. The macro overhang of diminishing client budgets will be felt into the reported set of numbers. However, having said that, the valuations are highly favorable. In fact, most of the challenges have been effectively priced in, and there is very limited downside from here on to incremental earnings-led shocks that come in. However, the and this also means that this comes along with a quite significant margin of safety, and at the same time, any surprises on the upside in the medium to longer term. We are not expecting any in the near term, but in the medium to longer term could be a very strong case for an earnings-led re-rating from here on. So most downgrades are behind us. So we are selectively and cautiously optimistic on the IT pack, especially sticking to the large and the large mid IT players. It would be better if export orientation is much lower, considering the entire H1B overhang that's in play. Any sort of currency deprecative effect must not be read into too much. Our expectation is it will be offset by selective wage rate hikes that are happening in the company. So overall, the print is expected to be neutral to positive, slightly positive. But this would also the guidance, the management commentary, and the guidance will help us identify opportunities within the entire set of IT players which are trading at attractive valuations. So it will be critical to distinguish a valuation trap from a value opportunity.
Mm, okay, yeah, that's right. But yes, apart from IT sector, any sector that you're watching out of ahead of the September quarter earnings? Anything that you're finding interesting?
So we like capital markets as a very niche segment within financial services. Capital market is a strong play while considering the entire overhang around regulation, tightening the laws around FNO trading and volumes, etc. We believe that brokerages and exchanges are just one small part. There are several other players also and other segments also in which capital market plays operate, including asset management. So as a pack, capital market looks like a good hunting ground as we speak. Aside from that, very selectively, there are a few banks, both on the public as well as a private side, but on the larger side. And there are a few large NBFCs, large to mid-sized NBFCs that we believe that could offer great entry points at this point, and will go through an earnings-led revival in their valuations going ahead.
Okay, all right. Just one last question before we let you go, Nirav. How do you see the next 2 months for the markets going ahead? And can we still be on track for the new highs this year?
So, markets can be expected to be range bound to sideways. There could be a moment wherein we get very close to a new high, but the time frame is really small. And with the earnings season coming in so close, there is very limited reason to believe there's going to be very big surprises. In fact, the prices on most large packs have already factored in any sort of festive-led consumption spending, etc. Right? So sideways to tightly range-bound is how we are looking at. It would be a surprise and a very happy surprise to see the market show or at least reflect a newer high. But we believe we could fall slightly short of it, at least in this calendar.
Okay, all right. All right, with that, Nirav, we have to let you go. But thank you so much for joining us and connecting with us.
Thank you, Lovisha.
All right, with that, we've come to an end of this edition of Closing Bell. But before I let you go, let me introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app and subscribe to Super Pro today itself to get all the alerts right on your WhatsApp.